Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. We just wrapped up our interview with Bob Bernotas, the president of franchisewithbob.com. Anthony, what was a takeaway or two you had?
Okay, one takeaway I had is that on these podcasts, we need to remind people to turn off their notifications. But I digress. It was a good interview with Bob, and we've had. I think this is the third franchise topic that we've had, and a good takeaway I got from Bob is he had said that franchising is not for entrepreneurs.
Interesting.
And I kind of figured that this is just for entrepreneurs, but when you really kind of think about it, he laid it out that entrepreneurs really typically have a vision and they want to do their own thing. However, with the franchise, the good thing of it and why you're buying it is because we have this model, right? And these rails and guidelines for you to follow, but an entrepreneur may want to create their own guidelines. But I know there's, entrepreneurship is not for everybody. And but a lot of times people, they don't want to rely on their job and looking for alternatives. So if maybe that entrepreneurship maybe isn't your bag, but you don't want to rely on your W-2 income, this could be a good way to slowly transition out into having your own business. So what were some takeaways that you had, Cam?
Yeah, the big takeaway I liked was the semi-passive approach, right? Is I like the fact that he alludes to someone building a business over a 6-month or a 6-year time frame, right? So it's not that somebody's completely abandoning what they're doing, but this is something that you could do and build up on the side. And I really liked his comparison between building a semi-passive franchise opportunity in real estate. And he had a reluctancy to share some of the returns that you can find on the franchising side. But it sounded like it would be a very good opportunity for a lot of people that would be able to plug into those opportunities. So I enjoyed the interview with Bob Bernotas. I hope you guys do too. And Bob is one of the nation's top franchise consultants who is passionate about helping people achieve the greatest level of satisfaction and success through franchise ownership. With years of experience guiding clients toward top performing franchise brands, Bob provides personalized guidance and support throughout the entire process of franchise exploration. So whether you're looking for an exit strategy from corporate life or a semi-passive opportunity, Bob is here to help you find your perfect match and create a brighter future. Hope you guys enjoy this interview.
Take care.
Welcome to the Infinite Wealth Podcast, where we teach clients how to build wealth and create passive income without the risk of Wall Street.
Bob, excited to have you here.
Thank you. Appreciate it.
Absolutely, man. Kick us off today. Tell us a little bit about kind of how you found yourself in this franchise consultant space.
Sure. My story begins, I guess, in franchising in 1986. So I'm a dinosaur in the industry, obviously, when I broke into my first franchise. I don't know if anybody remembers the video industry, West Coast Video, Blockbuster. Anyway, long and short of it, I had 5 West Coast Videos in the Philadelphia area. And lost my mind and went up to New York with them as well. And of course, everybody knows what happened to the video industry. I owned several other franchise concepts over the years that I've built and sold. I was CEO of a national chain in the tanning space, and I've been consulting for a couple of decades. When I originally started consulting, I was working with both prospective franchisees and with companies, helping them position for growth, but I've morphed entirely over to the franchisee side. So I basically, what I do is I help people identify, investigate, and acquire the right franchise for them. And I really specialize more in semi-passive franchises, where you can keep your job, create an off-ramp from corporate America, and so on. But you pointed to Cameron when I mentioned tanning.
Yeah.
Just because he wants to tan.
He does tan and hair.
Tan goes together though perfectly.
Was it Jim?
GTL?
Yeah.
No, Bob. I've never been in a tanning salon in my life. Sorry, listeners, for that. Anthony's being totally inappropriate. But Bob, All right, so you had a good background, right? And some franchises that you owned, and then kind of found yourself in the consultant space. Is man, tell us kind of where consulting is right now. What are some opportunities that you see that maybe others aren't seeing right now?
Well, the consulting industry, or in the world of franchising, has really evolved over the course of the last 10 years or so. More and more people have jumped into it based on the success of a single group. There's many other groups that have jumped into it. That's not necessarily a good thing. I'm actually anticipating and hoping for some regulation on the industry because it's gotten to be a little bit of a wild, wild west. But that aside, from the standpoint of the opportunities that are out there, go ahead.
Well, I'm sorry, Bob. I got a question. You mind elaborate on that just real quick? So, what I heard was that you've been there for a while. There's a bunch of people that jumped in, and it's unregulated. Are they saying stuff that's not quite true, or what's the issue there?
Yeah, some do.
Okay.
Some just go a little bit too far, and you really can't get into as a franchise consultant or even a salesperson if they're not numbers that have been published in a franchise company's item 19 of their franchise disclosure document. You can't talk about them. Yet there's people out there that are doing that. The thing is, and not to go down too far in this rabbit hole, but the unfortunate thing is there have been so many different companies that or franchise consultants that have cropped up that just don't have backgrounds in franchising. And there's groups that will charge anywhere typically from 25,000 up to and over $100,000 to become part of their group. They give you some training, they give you a certificate and say, now you're an expert in franchising, and you know nothing about franchising. You just don't have the
Got it.
experience. And the vast majority of people that get involved in these groups end up washing out over a relatively short period of time. But some people, like the allure of, hey, quick bucks. Can I make money in this industry? But it's not what it may appear to be.
No, Bob, we get that in
Yeah.
our niche as well. Just people that are overselling or exaggerating some of the results to try to get the business. Now, if somebody's looking, and I'm sure that's in every line of business, but Bob, how could somebody vet those people out if they're evaluating looking in the franchises?
Yeah, great question. I mean, just ask questions, look up their background, speak to some of the people perhaps that they have worked with. But I think the key thing is look at their background. Have they been involved in franchising before and on an ownership level? Okay, not work for a franchisee, even working for a franchisor, it's limited. But if they've been in an executive capacity within a franchise organization and a good one, and have they owned franchises in the past? Consulting is a big part of it too, because it's not just a franchise that a consultant has worked in or owned, but it's understanding what the landscape is and all the other types of franchise models that are out there, and which are the real ones and which are ones that you should shy away from. I mean, I would submit that easily half the franchises out there, I wouldn't go anywhere near. There's another 25%. But then there's some really, really good franchises out there. If you know what to look for, there's great opportunities in them.
Cool. Well, great. Let's start right there. Yeah, let's hit that top 25, or what's some of the things that people should be looking for? Or maybe let's start with this first, Bob, is why would someone want to look at a franchising opportunity first, and then secondarily, what should they look for?
You mean why would they want? Should they look at it over starting something on their own or sticking to corporate America?
Let's say both.
Okay. Well, I mean, if you're, some people, clients say to me, well, why don't I just do this on my own? It's the failure rate amongst independent businesses is astronomical. There's been studies done, and there's varying results from these studies, but not too dramatically different. But just to give an example, there was a study done. It was about 20 years ago now by the Chamber of Commerce, and they tracked a whole bunch of independent mom and pop type businesses that all opened within the same year. They tracked them over a 5-year period. And at the end of 5 years, roughly half, like 47 or 48% of those businesses were still open and operating, which actually surprised me.
Yeah,
I
me
Yeah.
too.
that much. Uh, Whereas they did it concurrently, they tracked a whole bunch of franchises that all opened that same year, and they tracked them over the same concurrent 5 year period. At the end of 5 years, 97% of the franchises were still open and operating. Now, some have turned over and they were in different hands. I think 89% were still in the same, owned by the same owner, and so some did turn over. But the fact is, I mean, 90+% were still open and operating, and it's not nowhere close with independent businesses. So, uh, and the reason why someone should look at a franchise over an independent business is that I mean, what the franchise company is doing for you, it's not just, okay, do they have 5 years of experience? They've been operating for 5 years or 10 years. And hey, once I'm in it for 5 years, am I going to have crossed that same threshold? Am I going to have gone through that same learning curve and know as much as them? No, because if it's 5 years and let's say they have 50 franchises, it's 5 times 50. Because all that data, if they're doing it properly, they are communicating with their franchisee. All that data is flowing upward, and they're making constant adjustments to the franchise model to make the model work better for the franchisees. In today's world, franchising is not like it was 30 years ago when if somebody could put together $1 million, $500,000, put together a franchise agreement. Let's say they opened, a little small restaurant, a QSR type restaurant, and they had some success with it. They opened a second one. That one was pretty successful, and it was the next town over. And then they decide, hey, let's hire a franchise attorney. Let's franchise it. We cracked the code, and they have this franchise. They create the franchise agreement, and they start offering franchises. Maybe they get the first couple sold, if that, and they fall flat on their face. That's a story that plays out over and over and over again. And the reason being is because it's not a question of them having success in the units that they're operating, but the question becomes duplicating that success. Okay, over and over and over again across many different markets, and making it work for the lowest common denominator. So franchising it's a difficult process. The companies that make it now are companies that are really well backed. I mean, it's not, $1 million anymore. It's tens of millions of dollars to go into these franchise systems to launch companies properly. And I know there was a second question in there, but Cameron's hair distracted me, so I don't
I get it. It happens quite a bit, Bob. I know.
Don't feel bad. The second question was the top 25, right? You alluded to.
jealous.
Yeah, you alluded to kind of the top 25 and some of the things that people should be looking for today, right? You said that 50% of them you wouldn't touch, but there's a top 25. What separates the top 25, Bob?
Well, I mean, top 25%, but again, and there's such a diversity in those, but I'll give you an example. I mean, like I said, my focus is on semi-passive franchises. And the reason it is because easily 80% of my clients, that's what they're looking for. They don't want to step away from their job tomorrow. They have good paying jobs. They have other investments. So they want to build an off-ramp from corporate America. And that could be within 6 months. That could be within six years from now. And many of them want to build a legacy for their family. So they're looking for something that they can put 10, 20 hours into a week. Still, that's a time investment, but a lot of people can muster that. And then over time, that becomes less. So anything you're doing now, if you're putting, let's say, 20 hours into it at the beginning for the first 6 months, well, the next 6 months, you're going to put a lot less. The following 6 months, you're even going to put less once the systems are running smoothly and you have the right people in place. And so with these semi-passive franchises, many of them or I should say many of the people that are getting into the semi-passive franchises, they're just looking to make an exit over an extended period of time. And most of my clients fall into that bucket. As far as opportunities in that space, there's a lot of different avenues we can go. I'll give you an example. I just bought a franchise recently myself. I bought it 2 months ago. We're in the onboarding process right now. And the way that came about is I was working with a client who was local, and I don't always have the opportunity because I work nationally. I can work with anybody in the country or in Canada. So I was working locally with a client, and I showed him a concept which I really liked a lot, and he fell in love with it instantly. It's a men's health concept, carries an investment of about 300 or so $1,000. No hair replacement is part of that, by the way.
Mm.
Um, but about in the $300,000 range. And I showed it to him. He fell in love with it. He didn't have enough money to start it. I liked the concept enough that I raised my hand and said, John, I'll invest with you. And what was going to be one unit quickly became 3 units. I brought in a couple additional guys and put together a small investment group. And now we bought 6 units that will be opening over the course of the next handful of years. But I point out something like that is, and I won't name the concept because I can't associate it with the numbers I'm going to share with you, which are directly from their item 19 of their franchise disclosure document. But the average top line in their item 19 of their FDD is 1.8 million. The average bottom line is over 600,000. Okay, now that's a unicorn, gentlemen. There's not too many things I can show anybody that will have that type of return on investment. But if someone said to me, Bob, show me the best financial opportunities in franchising, that certainly may be one that I show them if there was availability in their market.
So if that's unicorn, what's maybe some averages, or what's something that right? Are you only hitting home runs, Bob? What's something that is?
That's what I shoot for, but no,
Yeah.
that's not always the case. Depending upon what somebody's into. I always counsel my clients, and I will tell you, everybody doesn't necessarily. It won't be a good fit for me to work with me. If somebody tells me, Bob, I'm looking for, I want a pie baking franchise because I love to bake pies. You probably don't want to work with me. It's not going to be a good fit. I wouldn't feel right about putting you in a franchise that I know you're just not going to do well financially. To some people, that doesn't matter. I mean, a lot of people love their dogs, so they want to be in pet related concepts. And I'll often ask them the question, how important is it for you to make money? Now, not to say there's not some good financial opportunities in the pet industry, but there's some not so good ones too, and depending upon what your budget. But if someone says to me, Bob, show me the best financial opportunities in franchising, ROI, earnings, don't care what the widget is, semi-passive, then that's the type of client that I work best with.
Bob, that's a lot of our clients are looking at real estate for kind of those characteristics that you just described, semi-passive, right? Great ROI. How would you compare real estate to franchising opportunities?
Yeah, I think, real estate is always perceived as a very safe investment. And it can be the same thing in franchising if you get into the right franchise. If you get into the wrong franchise, not so much. But if you get into the right franchise, I mean, the return on investment is going to be significantly greater than real estate. I'll give you an example. I mean, I just had a call with a client I'm working with now. Speaking with him and his wife this morning, and he described to me he owns a number of properties and multi-unit properties, and I think he said he has about 200 doors in his total properties, and he's little cash flow is coming out of it. I mean, minimal, but what are you doing in real estate? You're riding the equity, right? You're built. It's a long-term play. It's not a short-term play. But he bought before COVID. He bought in 2018, and then COVID hit. And where he has really made out like a bandit is, I mean, equity has gone through the roof in it. So his property values have doubled over a very short period of time. So I think if you catch the right situation, real estate can be phenomenal. But if you're in a market where the values aren't growing, and it's a long-term play, it's a 20-year play, I would say. Whereas franchising, if you get into the right franchise, and let's say, I'll give you another example. I've placed a lot of my clients into a concept. They do gutters, something really innocuous. I mean, boring. It's certainly not a sexy business, but $250,000, $300,000 range to get into this concept. but the average top line is 1.7, and they drop like 25%, close as much as 30% to the bottom line on an investment that is sub 300K. And so with something like that, if you bought a franchise and you started building it, and let's say 3 years into it, you're hitting those numbers, what is that franchise worth? So if you're dropping, say, nice round number, 500K to the bottom line, I mean, it should be worth a 3 to 5 multiple of earnings. And most franchises that are profitable are sold for. So that would suggest it could be sold for, quick math, 1.5 to 2.5 million on an investment that they may have made of $300,000 initially. Now they may have added some vehicles and personnel over time, so maybe they had $450,000 into it. But when they sell it, I mean, you're building equity at a much more rapid rate, and that could be within a 3-year period. One of the franchisees with that concept that I put into that concept, his first year he did 1.6 million. Second year, he told me he'll finish up this year somewhere between 3.2 and 3.4. And again, it wasn't a significant investment.
Okay, great, Bob. So you mentioned a couple of different opportunities, and they were both around 300,000. Is that typically the average investment needed?
No, I mean, it's all over the place. I mean, I can show you concepts that are $7 million investments that are still good investments, but the ROI isn't going to be the same. But many of them, I would suggest that you're starting around on the low end 150 and going up to anything to get into a decent, but a lot fall in the 150 range to 400K range that I think are really good investments and will have a significant return on investment. The looking at those types of concepts, for instance, it's going to be dramatically different. Okay. I mean, I can show you, to me, it doesn't make sense to look at concepts that are like a $5 million investment, like a Big Blue swim school or something, not to knock them in any way. I mean, you can drop $500,000 reliably to the bottom line. But I mean, it's a $5 million investment. So that to me does not make sense. There's so many things you can get into and scale and build into something significant without making a huge upfront investment.
But I would say, but Bob, we have a lot of clients, and I think you mentioned the 150 to 200 range. I would say most of our clients are looking at real estate investments around that range. So just being comparable, what are some opportunities that they might be presented with in that under $200,000 range?
So quick question to that. Now, is that the $150,000, $200,000 range? Would that be the all in it? Would that be their cash portion and then a leverage, or would that be, they wouldn't want a property more than 150, 200?
Great point. So if someone's got 200,000 of cash, what would they require, right, to have backing them up for some sort of franchise opportunity? Maybe start there.
Yeah. Well, I mean, my typical client, or I'd say the starting point is maybe, and to get into franchising, maybe 50K liquidity and $250,000 net worth. But if somebody's coming to the table and they say, hey, I can invest $200,000 into something, we could probably look at concepts all the way up to $1 million. I mean, SBA, for instance, they want about a 20% capitalization. Now, I'm not saying we should look at those types of concepts, but if somebody wants to put 200K into something, there's lots of things that we can look at that would be considerably less expensive that they can just have, they can capitalize to a greater extent. They could have more, they could have less debt into it. But yeah, I mean, just to give you an idea, I mean, a lot of the things that are the better investments and lower cost investments fall in the home service category. And believe me, it's not a sexy category, but it's a very lucrative category. Anything having to do with the home, like gutters, I had mentioned, that's one type of concept. But what's driving that category is the fact that, number one, baby boomers were the do-it-yourself generation. They've pretty much aged out of that at this point. And younger people's attitude, for the most part, is, hey, my time's too valuable. I'll hire somebody else to do that. So that's part of it. It's a fragmented mom and pop industry that is ripe for roll-ups. So you see more and more franchise players coming into that category at this point. Plus, you have a situation where young people aren't going into the trades any longer. Very few are going into the trade. It's leaving a massive void. So there's more and more opportunity to get into these spaces. And what I find most interesting is a lot of these companies, these franchise companies, have really smartened up and they have introduced semi-passive models. What I mean by that is, typically franchise investors would invest in brick and mortar retail. Could be a small restaurant, and then start to scale it and open a second, third, fourth, or beauty or boutique fitness, and then open multiple units over time and have a manager running each one and a general manager overseeing the managers. They didn't get into the service space because there weren't semi-passive opportunities. They couldn't operate them like that. But now more and more of these companies are developing the tools necessary to support franchisees on a part-time basis. They just develop a stronger platform and support you at a higher level. One example, let's say if it's something that is sales, really, you can use that gutter concept, for instance.
Mm-hmm.
So the reason that can be done semi-passive is one of the tools they developed is a national call center. So when you as a franchisee, when you plug into their prescribed marketing and advertising, it's all laid out for you. And the calls start to come in, the emails start to come in, they go directly to the national call center. They take those calls, they convert it in for your salesperson because you're on the same software platform that they are. Salesperson shows up, wins the job, schedules the labor. So more and more of these types of companies, or franchise investors, I should say, are getting into these types of concepts.
Great.
Bob, who would you say that the franchise model, who is it good for? What sort of attributes should somebody have?
Great question. It's not necessarily what you think. Give him a nod. He did good.
Bob, I don't know if you've noticed, I've asked some good questions too. But
no, I don't think he has. I don't think he has.
There. All good. So what I have, now I forgot the question. Hit me with that again.
Who is franchising good for?
Good for?
Yeah. So what most people would think of is they're entrepreneurs. They're not. It's people coming from corporate America. Now, if you go back 30, 35 years ago, and I'll give you an example, a brand called CertaPro Painters. It's the top painting franchise out there. Very successful brand. But in the early stages of their development, they were looking for painters to make franchisees. What they quickly discovered is painters are not very good business people and they make lousy franchisees. So they quickly reset their model and simply started looking for smart people who have basic business acumen. They have drive to build something. They have people skills and they have the financial capability to execute upon their model. That's it. Franchise, everything else can be taught, but you can't teach in basic intelligence. And you can't put drive into somebody and give them people skills.
Right. Yeah. Yeah.
So typically, most of my clients are coming from corporate America. They're anywhere from mid-management to upper management to C-suite, and they're looking for a off-ramp at some point in their career.
Bob, I'm a big fan of like case studies. Is it all right if maybe we talk about like this gutter business that's kind of come up a few times? Is that all right? Sure. And the questions I was going to have for you would be like the amount of time and energy that somebody need, the amount of capital, the level of risk, right? The expected ROI, and then their exit strategy on that type of business. Is it all right if I just went down the list with you?
Go down. I don't know if I can answer all the questions. Not that I can't, but some questions I'm just not permitted to unless they're disclosed in their FDD. But go ahead, please.
Awesome. So if somebody were to come to you, right, and the gutter business, right, you mentioned as it being semi-passive, what financial qualifications would they need to qualify for that?
Yeah, I want to say that one is asking that you have $100,000 in liquidity, I believe, and $250,000 net worth.
Okay. And how much time and energy, if somebody bought that type of business, what would be expected of them?
Yeah, so that would be a managed manager model. So if you got into that one and you were going to do it on a part-time basis, you would have a GM running the business for you. So they would help you in identifying and that general manager. But basically, that person would go to training with you. Now, you should learn everything as well as a franchisee, because if something happened to that general manager, you may have to step in for a period of time, unless you have some redundancy already built into your model and you have someone that's a strong candidate to step up into that position, which I'd always recommend. So in the early stages, you might be putting in that one 20 hours a week into it with a GM. Now the GM is, so that's going to come out of the profit margin, but that one has such a stellar profit margin that it can easily absorb that general manager, even if you pay him $100,000. But once that brand is up and running and all the systems are running smoothly, your people are running smoothly, you should be able to back off and spend less and less time of your involvement in it.
Awesome. How long do you think it'd take to get it down to like zero? Right? Is that like years or what does that look like?
I don't know if it's ever going to be zero. Just like you manage your investment properties, even if you have a management company, you still manage them to a certain extent. You pay some attention to them. There are brands we can talk about that are actually considered passive brands, where either you don't have any employees, or like an automated car wash or an automated laundromat or something along those lines. Somebody go around collecting every once in a while. Or you're talking, or there's some concepts that will actually run the business for you. They will step in for a management fee. They will run the business for you. Those tend to be a little bit more expensive, starting in the $500,000 range and going up to, whatever you want to spend. Did I answer your question?
You did. Absolutely. What about level of risk? Like how risky is kind of a gutter business or something similar to that model?
I can't put a percentage on it because it really depends upon the operator. It depends upon the market they're going into. It depends upon their territory. I could just, fall back on the numbers that I quoted earlier about the Chamber of Commerce study. That one, see those types of concepts, anything having to do with home serve. I love things that are evergreen, meaning they're never going to go away. They are not threatened by Amazon. You're not selling a product. All product-based only franchises that are just based on products. I will not go anywhere near those businesses at this point. So I look for things that are Amazon resistant, that are pandemic resistant. If a pandemic hits again, what businesses are going to fare best during situations like that? Certainly not food concepts, certainly not fitness or beauty or brick and mortar retail is going to be damaged, but food was crushed by the pandemic. So again, I like things that aren't going to be affected by pandemic. Probably the big one is recession. What concepts are not going to be in a large way, or maybe even not at all, by recession? When you're looking at something like the home service category, and another reason why I like it so much is that if a recession, it's people tend to dig in and they're not going to upgrade and buy a bigger home or a nicer home. They're going to dig in and put more improvements into the home they're in. In the current state of things, you had such a run up on equity in properties and a run up on interest rates. People aren't moving right now, and there's very little inventory on the market. So people are staying in, but they have all this equity, and now they're putting money into their homes and just making improvements to the homes they're in. So that's what, in part, is causing the boom in the service category.
Awesome. Great. Kind of two more just in regards to this, but the expected ROI, right? Somebody drops in 100. What can they expect as far as income?
That's such a difficult question to answer because there's so many different directions.
Sorry, Bob. Sorry.
Forgiven, all is forgiven. There's so many different directions, and it's really not a question that I'm allowed to answer. I can answer unless it's published in their item 19 of their FDD. But I just will tell you that the ROI on things like the service industry or some of the things we discussed, these are at the top of the heap. When you start talking about a 25 to 33% ROI, that's obviously significant. There's plenty of franchises where you might experience, if you get into food industry, typically you're going to be below a 10% RO, a 10% margin, profit margin.
Mhm.
Awesome. And the exit strategy. How long are people buying, hanging on to these things?
Uh, I mean, it really depends. I mean, if franchise investors, often they have a strategy, they want to buy, build, sell. And that could be a 3-year plan, it could be a 5-year plan. They tend to build equity very rapidly, unlike real estate with franchises. If you make that franchise successful, even if you haven't peaked or come close to peaking yet, but you can see a growth trend, and it's easy to see where it's going based on historical data from other franchisees in the same system. Often you can sell for a much greater multiple than what your current profit margin is.
No, I appreciate. Yeah, no, I like that. The kind of the most to have a buy, build, sell approach. Bob, can you maybe speak to us or enlighten us? Is there a generational approach to this? Right? Is there people that are passing these down to the next generation? What does that look like?
Yep. Many people want to get into it to build a legacy for their kids. I mean, countless clients that I've worked with are looking to they have children and they want to get their kids involved in the business. They want them to learn business. I find it really interesting in the last handful of years. So I mean, people are deciding, hey, I'm not going to send my kid to college. My kid doesn't want to go to college, and you know what? I don't see the same value in college that I saw 25 years ago. And so a lot of kids are not doing it and getting into trades. I mean, I have a son engineering, so he's already gone. But my 4 daughters, and if I'll tell you what, if they were guys, not to be sexist about this, but I would push them towards the trades. Learn a trade, and then start your own business in that trade. I see so many people having success with that, and that's what these franchise models can give you a shortcut towards. Did I answer your question?
Yeah, yeah,
I,
yeah.
Bob, you had answered who this is for. Who are franchising not for?
good question. That's a look at him again. Franchising is not for those who are strictly entrepreneurial. People who just, I'm going to do it my way. I know the best way to do it. And they don't want to follow a model. I mean, the value that you get when acquiring a franchise is that you're buying a proven business model. They've already proven it multiple times with multiple franchises over multiple markets. So the model is pretty much proven. Follow the model. Can there be improvements to the model? Sure. Can you make suggestions? Sure. And the better companies have a conduit for taking those suggestions, and the better ones implementing those suggestions. But if you're someone who you have other businesses and you just want to do it your way and you don't want to follow a franchise model, if you're going to butt heads with them, franchising is probably not going to be right for you.
Okay, Bob, I had one last question. What is a common myth about franchising?
I think it's probably something that I already mentioned, and I'm looking upwards because I'm searching for this and I don't remember. Uh, that franchising is something that you do in lieu of a job, that you have to walk away from your corporate job to get into and to thrive in. If you go back 25 years, yes, that's the case. I wouldn't suggest to anybody back then to try to hold down a job and do a franchise, with the exception of very few. But more and more of these brands are developing these models, these platforms to support franchisees. They're making significant investment in them to just support you at a higher level. So you just do not have to do it on a full-time basis anymore. There's plenty of models you can get into that you can put 10, 15, 20 hours a week in, get it up and running. 2 years from now, you may be putting 5 hours a week into it.
Okay, great.
Great, Bob. If somebody's listening and they're looking for some passive or part-time passive investment opportunities, franchise opportunities. Sorry, Bob. Where can they reach out to you at? Where's a good place for them to find you?
They can go to my website. It's franchisewithbob.com. Very simple, franchisewithbob.com. I'll be happy if they want to reach out to me through the website. I'll be happy to send them my free ebook on semi-passive franchising. And yeah, that's it. That's how you reach me.
Well, Bob, what's your role in this process, and how are you compensated?
Okay, great question. And again, it came from this side of the
Yes, yeah, Bob, we're not keeping score, or maybe I am, but we don't want other people to keep score.
Anthony's killing this interview. Good job, man. You did great. You did great.
Hit me with the question again. I'm getting old, guys. I don't remember things.
What's your role in this process, and how do you help them?
So I take people through a structured process to find the right concept. I'm actually compensated by the franchise companies for bringing qualified people to them. The vast majority of people that come to them through other means, through the internet, through online portals, 95% easily are not qualified, so they waste a lot of time. So I'm compensated. They're more than happy to compensate me for bringing qualified candidates to them. If the candidate is approved for a franchise and they acquire a franchise, then they compensate me. But there's something very important to understand about that also. Despite the fact that I'm being compensated by the franchise company, I'm an advocate for my clients. I don't work for the franchise companies. I have no allegiance whatsoever to these franchise companies. I only care that we find the right one, because I can take you to any of these companies out there. They're all more than happy to compensate me. And it doesn't matter if it's a $150,000 franchise or a $1.5 million franchise. The compensation level to me is virtually the same. Might have a 10 to 15% variance. That's it. Because it's based on the franchise fee, and all the franchise fees, there's not a lot of variance in those.
Great.
Gotcha.
Good to know. Great, Bob. Thank you. Really appreciate your insight and the overview today. Thank you, Bob.
Thank you, guys. Really appreciate you having me on, and I love the back and forth zingers. They were
Me
fun.
too.
But it clearly one side won today. So
Oh, clearly.
You know what?
He won the zingers and he won the questions.
We're
these
partners.
Questions
We're
were
partners.
phenomenal.
All right, we don't keep score. But if we were, but we're not. Okay, Bob, thanks again for your time and information. Go make it a fantastic day.
Take care.
thank you, guys.
If you like this video, I know you're like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.